the Reference Guide to Regulatory Compliance, BSA section. We are within the CIP program section 10. I don't know if we're in subsection B or subsection A of the CIP. We went over coverage. We're actually in subsection B, requirements, and just went into some verification requirements. And I believe if we're using non-documentary methods, we might do things such as contacting a customer, Roman numeral 2, comparing information provided by the customer with that received from a consumer reporting agency or other public database, 3, checking references with other financial institutions, and 4, obtaining a financial statement. E, non-documentary procedures must address the following situations. Roman numeral I, the customer does not have an unexpired government-issued identification document. Roman numeral 2, the bank is unfamiliar with the documents presented. Roman numeral 3, the account was opened without first obtaining the documents. Roman numeral 4, the customer opens the account without appearing in person. Roman numeral 5, the bank is presented with circumstances that increase the risk that the identity of the customer will not be verified through documents. F, additional verification required for certain customers. When opening an account for non-individual, the bank must obtain information about individuals who have control over the bank. Additional methods of verification must be used when the bank cannot verify the customer's true identity through documentation or non-documentary methods. G, failure to verify identities. The bank's CIP should contain procedures to address situations when the bank cannot verify the customer's true identity. These should include Roman numeral 1, when the bank should refuse to open an account. Roman numeral 2, when the bank should allow a customer to use an account while it attempts to verify the customer's identity. Number 3, when the bank should close an account after attempts at identity verification have failed. Roman numeral 4, when the bank should file a SAR in connection with failure to verify a customer's identity or other suspicious activity. 5, record-keeping requirements. The bank CIP procedures must include provisions for making and maintaining records of all account information obtained during the verification process, including A, all identifying information about the customer, and B, a description of any document that was relied on, including the type of document, any identification number on the document, and the date, place of issuance, and expiration date of the document. The bank may keep copies of identification documents such as driver's licenses, but may not use a picture of an individual in connection with any aspect of the credit transaction. A description of the methods and results used in verifying the identity of the customer and results in any measures taken to verify the identity. D, a description of the resolution of any discrepancy that occurred during the verification process. E, records retention. I, all records obtained to identify a customer before opening an account must be retained for 5 years after the date the account is closed. These records include the customer's name and date of birth, address, and ID number. For credit card accounts, records must be maintained for 5 years after the account is closed or becomes dormant. Roman numeral 2, records used to identify the customer's identity using documents, non-documentary methods, or other methods must be retained for 5 years after the record is made. Government lists. The bank CIP must contain procedures for determining whether a customer appears on any government-issued list of suspected or known terrorists or terrorist organizations. B. The bank's CIP procedures must require the bank to follow all government directives relative to checking these lists. Customer notice. CIP must have adequate procedures for providing customers with a notice that the information is being used to verify the identities. A. The notice is adequate if it contains the identification requirements of the regulation. B. The notice must be placed in a manner that the customer will be able to view it before opening an account. For example, it can be Roman numeral I posted in the bank's lobby, Roman numeral II posted on applications, Roman numeral III posted on the bank's website. 8. Reliance on other financial institutions. The bank's CIP may state when it plans to rely on other financial institutions, including any affiliates, for compliance with the CIP regulations. Such reliance is only allowed if it is reasonable under the circumstances. The bank relies on a financial institution also governed by the CIP regulations and is federally regulated. And 3, the other financial institution enters into a contract with the bank requiring it to certify annually that it has implemented its anti-money laundering program and will comply with the bank's CIP. There are exemptions. A federal banking regulator can exempt any type of account from the coverage of the CIP regulation with the occurrence of the Secretary of the Treasury. With the concurrence. An examination manual, information, and customer due diligence. A. CDD procedures enable banks to predict with relative certainty the types of transactions in which the customer is likely to engage. B. Procedures should include enhanced CDD for high-risk customers. C. BSA AML policies should include CDD guidelines. D. CDD information can be confirmed through information reporting agencies, banking regulations, references, correspondent and telephone conversations with the customer, and visits to the customer's place of business. E. Enhanced CDD for high-risk customers is critical in understanding anticipated transactions and monitoring for suspicious activity. Due diligence is an ongoing process, and banks are expected to take measures to ensure account profiles are current. Account monitoring should be risk-based, and risk profiles should be adjusted. Suspicious activity may need to be reported when activity is inconsistent with a customer profile. F. For high-risk customers, the bank should consider obtaining the following information when the account is open. Roman numeral I, the purpose of the account. Roman numeral II, the sources of funds and wealth. Roman numeral III, beneficial owners of the account, if applicable. Roman numeral IV, the customer's occupation or type of business. Roman numeral V, financial statements. Roman numeral VI, banking references. Roman numeral VII, domicile or business is incorporated. Roman numeral VIII, the proximity of the customer's residence, place of employment, or place of business. Roman numeral IX, a description of the customer's primary trade area and whether international transactions are expected to be routine. Roman numeral X, a description of the business operations, the anticipated volume of currency and total sales, and a list of major customers and suppliers. Roman numeral XI, explanations for changes in account activity. Now we are up to the suspicious activity section of BSA. Part 11. A. Your coverage is as follows. A SAR must be filed A. when a bank suspects an identified insider of committing or aiding in committing a crime regardless of the dollar amount. B. when a bank detects a possible crime involving $5,000 or more and has a substantial basis for identifying a suspect. C. when the bank detects a possible crime involving $25,000 or more and has no substantial basis for identifying a possible suspect. D. when the bank suspects currency transactions aggregating $5,000 or more that involve potential money laundering or violation of the BSA. I. includes structuring a transaction to avoid the BSA reporting requirements. 2. includes a transaction that has no business or apparent lawful purpose or is not the type of transaction that includes a transaction that has no business or apparent lawful purpose and is not the type of transaction the customer normally conducts. 3. includes a transaction involving funds from illegal activities that is intended or conducted to violate or evade any law or regulation or any report required under federal law. 2. A SAR not required for lost, missing, stolen, or counterfeit securities if a Form X-17F-1A is filed. B. For robbery or burglary that has been reported to appropriate law enforcement agencies. That's when a SAR is not required. So when you lose stuff and when you're robbed. And federal investigators are already involved. B. Filing requirements. 1. A bank must file a SAR with the Department of Treasury's FinCEN. A. Within 30 days after initial detection of facts that may constitute a basis for filing a SAR. B. Filing may be delayed another 30 calendar days if needed to identify a suspect. C. The bank also should telephone the appropriate law enforcement agency and its supervisory agency if the violation requires immediate attention. D. SAR filing should include only the information required on the form itself. Documentation and other evidence should not be filed. 2. Any SAR must be promptly reported to the bank's board of directors or designated committee, excluding any director or executive officer that is suspect. Three, if the suspicious activity continues, the bank should file a SAR at least every 90 days. 4. SARs and supporting documentation must be maintained for 5 years from the filing date. 5. Banks are protected from liability for disclosing information in SARs. 6. Banks are encouraged to file SARs on disks using the software provided by FinCEN or on magnetic tape. 7. FinCEN has begun publishing information on money laundering and other illegal schemes identified through SAR filings. 8. SARs must be kept confidential. Requests for disclosure must be denied and the regulatory agency notified among branch offices, including foreign branches. SARs may be disclosed only to any entity that has a controlling interest in the financial institution. Penalties. Willful failure to file or careless disregard for filing reports in a timely manner can subject the bank, its officers, and or its directors to civil money penalties. D. Examination manual. Requirements for systems to identify, research, and report suspicious activity. 1. Banks should have policies and procedures that indicate the persons responsible for identifying, researching, and reporting suspicious activity. 2. Level of monitoring for suspicious activity should be commensurate with the bank's assessment of risk, with an emphasis on high-risk products, services, customers, and geographies. 3. Monitoring systems may include employee referrals, manual systems, automated systems, or a combination of systems. 4. Manual monitoring systems may consist of a review of various reports generated by the bank's management information systems. 5. Automated systems use computer programs to identify individual transaction patterns or unusual activity. E. Examination information on law enforcement inquiries and requests. 1. Banks must have policies, procedures, and processes for identifying subjects of law enforcement requests, monitoring transaction activity of the suspects, and identifying unusual and suspect activity. Two, banks should be aware that law enforcement may have an interest in ensuring that certain accounts remain open, notwithstanding suspicious or potential criminal activity in connection with those accounts. And we have here in parens, FinCEN Guidance, June 2007. A. The bank should ask for a written request indicating that the agency has asked the bank to maintain the account and the purpose of the duration of the request. B. Written requests from law enforcement are valid for a 6-month period and may be extended through subsequent written requests. 3. National security letters are written. NSLs are written investigative demands that may be issued by a local FBI or other government authorities in counterintelligence, counterterrorism investigations. Banks that receive NSLs must take appropriate measures to ensure the confidentiality of the letters and must have procedures in place for processing them. We are at high-risk customers, Section 12. So we have passed through the suspicious activity reporting section. Non-bank financial institutions, NBFIs, referred to in the 2010 Examination Manual and the OCC AL 2004-7. Discuss high-risk customers. Not sure if they're discussed in Chapter X. But anyway, definition. Institutions other than banks that offer financial services including A. Casinos and card clubs, B. Securities and commodities firms, C. Money service businesses, MSBs, D. Insurance companies, E. Other financial institutions such as dealers in precious metals, stones, or jewels, pawnbrokers, loan or finance companies. 2. Compliance requirements for NBFIs. banks with NBFI accounts are required to develop policies and procedures to identify NBFI relationships. Hold that thought.